Hey guys, good evening. This is Dave with Moneyology.com. Hope everyone is having a great weekend. This is the weekend market review for the weekend of August 26th and 27th. Let's have a look at the charts. So for those of you that are new to our style here, what we like to do is we like to look at longer term charts to give us a perspective on the markets. Then we go into the weekly charts for a midterm look, and then we look at the daily charts to really understand what the short-term pulse of the market is. And we've got about 20 different major indices and various different sectors that we believe are provide an important pulse on the markets. We're not going to do this in any particular order, and let's take a look. So we'll start with the monthly chart of the TNX, which is the 10-year Treasury yield. It provides us of where the gives us a perspective as to where the yields in the market are going. And this is important for a number of different areas. One is commodities, another is basically overall stocks, especially dividend stocks, currencies, etc. So this is a very important index to consider. So when you look at the monthly chart, I see a couple things that stand out. One is that we have double bottomed here in middle 2016 with this 2012 dip, and yields are in a bullish pattern. However, this is a bullish long-term chart. This could take years to play out, and so we believe we're in a correction here from this bullish move here, and we think that this is going to see some lower lows closer to the 20 area, possibly as low as retesting this downtrend line as low as around 18. And the reason why we see this is we'll look at the weekly charts that shows greater clarity. But if this 50 level breaks on the monthly RSI, expect a dump in the 10-year Treasury yield closer to this 20 level relatively quickly. So looking at the weekly chart of the same index, this is what we're looking at. This is a bullish flag, and so eventually we expect this to break to the upside. But we expect this lower boundary to be hit and possibly tag this particular downtrend that was broken out of here around that 18 level. So we've got some downside here, and that bodes bullish for precious metals in particular and commodities as a whole. This is the daily chart of the same index. Again, this looks very weak. We're below the 50 on the daily RSI, and it's creating continuously lower highs, and we think that this is going to break down below this 40 level and ultimately test that 30 level. And again, we think that this is going to coincide with this 19 to 20 level. So definitely an index you want to keep track of. Gold monthly, first and foremost. This is a very important development here. This is a long-term bullish breakout of this bullish wedge that's been developed since 2011, and we're finally breaking above it here. And while it still needs some very nice confirmation the next couple of weeks and months, RSI is showing significant strength relative to previous attempts here of breaking that 1300 level. So RSI leads price action 99 times out of 100, and this is what we're seeing here. We expect this to break higher and ultimately test this upper Bollinger Band around the 1370 area before possibly consolidating and possibly backtesting this trend line before heading higher. But in the next couple of years, don't be surprised to see this 1900 level tested, and so there's some significant upside ahead in precious metals. Looking at the weekly chart, again, 1300 level is very important and crucial resistance, but again, RSI is showing significant strength, and we expect this to break to the upside soon. On a daily chart, we had this crazy hammer handle here where we dipped below the uptrend since July, washed out a lot of people, and then bounced and closed above it. So don't really know the fundamentals behind why that happened, but the volume and this beautiful support and close above this trend line suggests that 1300 will be broken this week. So stay tuned. Next is the high yield junk ETF, and this gives you a good understanding of kind of the overall health of the credit sector of the economy. Very often, once this sector rolls over, it foreshadows a dip in the markets, possibly a recession. What it is showing is this is at the very least a pullback that's beginning, and you see the MACDs on the monthly are starting to crawl towards that zero level. We'll remains to be seen how low this goes, but it's something to be aware of, that there is some weakness in the junk yield, junk bond ETF. Looking at the weekly, there was this bearish wedge pattern. What happens is when you have this very tight consolidation in this wedge-like formation to the upside, it's very often a bearish pattern that breaks down. When the breakdown happens here, as we're seeing here, it's found some support on that Bollinger Band, weekly Bollinger Band, and we had a nice move to the upside this week. But we think that this move is going to fail as it retests this wedge from the downside. If this does fail, expect this 34.50 level to be the next strong level of support. And prior to that, there's that 50 on the weekly EMA as well that's going to provide some support. But ultimately, we see that the markets are in a corrective phase, and this level should be tested in the not too distant future. And on the daily, on this ETF, well, it's had a nice rally from this 36 level, so let's stay tuned to this 37 to 37.25 zone. If it breaks to the upside, then frankly that invalidates our longer term perspective. But very often what happens is this major break on RSI around the 60 level coincided with this drop from 37 all the way to 36.50, and that level is now being retested from the upside on RSI. We expect this to serve as major resistance, and wouldn't be surprised that that's precisely where price will take its next move lower. Next on the list is crude oil. Let's have a look at the monthly crude oil chart. And when we look at the monthly chart, we see an inverted head and shoulders pattern, which suggests that in the next several months, we think that oil is actually going to reverse higher to eventually test this 80 mark. Now, it might take several months, possibly a year, to test this marker, but we think that we have more upside potential at this point than downside potential. A lot of money flow to the upside, a lot of volume, and like we said, this might take a long time, but we think the lows in oil have already been hit. Looking at the weekly chart, look at this consolidation. For basically since 2015, we've been oscillating between this 40 and 50 area, with a dip below to 26, a dip above to 55. But RSI has broken this downtrend, and now we're testing it again, potentially from the upside. So there could be some lower prices in the medium term for oil, but we think that this downtrend is over, and we should be on the lookout for a resumption of this uptrend. Stay tuned for a break above 50. Until then, there's no reason to be long this particular sector. Now, looking at the daily chart of crude oil, this is another one of these shoulder, head, and possibly another shoulder developing here that we saw in the monthly chart. And we're above the 50 on the daily RSI. The MACDs are circling towards zero and appear to be bullish. So a move towards 53 is what I want to see here to confirm my bullish thesis. Move to 53, possibly a retest of 50 from the upside, and then eventually, boom, a breakout that will take the sector higher. What you see in a lot of the oil ETFs, such as XLE, PSCE, XOP, etc., is that they are confirming bullish divergence. So their price is acting more positive and showing more strength relative to the overall oil contract. So that's definitely what you want to see in a positive bullish environment. Nasdaq monthly. This is a very bearish development in Nasdaq. We're exceptionally overbought here, and this is still relatively bullish to be overbought in this way. But this bearish breakdown of this wedge is one that you want to see. If it's confirmed and we see another drop down in the months ahead, we can see a pretty substantial pullback to this 5,400 level. So want to keep an eye on Nasdaq, which has been, I think it's averaged about 25% returns over the last 5 years. You look at the weekly chart here. It's found some support on the middle Bollinger Band, just as we predicted last week, and so far it's a hammer pattern. But the RSI is below 60 now. It's retesting from the downside. We think that it's going to be met with resistance and eventually circle back towards that 5,800 level, 5,900 level, which is the 50 on the weekly EMA, before finding additional support. And on the daily chart, it shows RSI is creating lower highs consistently. It's below the 50 on the weekly RSI, and so we think that there's more weakness ahead. And the 200 EMA of 59.28 is kind of coincides with the 50 on the weekly chart, so we think that this level is going to be tested and probably break to the downside, wash out some weekends, and attempt a rally, and then kind of see where the fundamentals take us from there. Taking a look at the Russell 2000, this has been one of the weakest sectors in the market this year, whereas Nasdaq is above the 70 on the monthly RSI. You see that the Russell was unable to take 70, and it's created a negative divergence where price has substantially rallied relative to previous price point, but RSI never got to above the 70 marker, and that's this negative divergence that you do not want to see if you're a bull. It's rolling over precisely where it broke down last time around the 70. So that's sharp resistance here, here, here. So that's a level that of resistance that is very challenging to break through, and yet price broke out, and that's not what you want to see. It wasn't backed by momentum and wasn't led by momentum, and that's typically a very weak indicator, or a very strong indicator that we're going to see weaker prices. We expect a move towards 900, and that's a pretty substantial downturn. Look at the MACDs. If they don't turn back around in the coming weeks and months ahead, there can be a substantial correction in this particular index. Weekly chart had a nice bounce as we expected off of this support line around 1350. Expect this middle Bollinger level around the 1400 area to serve as resistance, as well as, and more importantly, that 50 on the weekly RSI. We expect that to serve as resistance and ultimately break lower. Wouldn't be surprised to see 1300 on the Russell being tested this week. Russell daily, this is just a bounce, and we expect this to break down to see lower prices in the not too distant future. Let's take a look at the S&P 500. S&P 500 monthly chart. What we got here is another wedge, not charted out here, but this is a wedge that's appearing like it's starting to break lower. Still very bullish chart, very overbought, but precisely where the best gains happen is when you're in overbought territory. If this breaks lower below 70, that's when the sharp move to the downside could happen. But for the time being, unlike the Nasdaq and unlike the Russell, S&P looks very strong on the monthly chart. Let's have a look at the weekly. The weekly chart has we found support around that 24.25 level, and a nice hammer pattern so far, but again we're testing the 60 level, 61 level from the downside. We think that that's going to be met with resistance and break lower. Next support is around the 2300 level. If we break 2400, we think that 2300 level is next to be tested, and that's likely to coincide with the 50 on the weekly RSI, which is going to serve as fairly strong support. And looking at the daily, still lower highs being created on the daily RSI, and this 2450 50 level is pretty strong resistance at this point, 2460 level, and the middle Bollinger Band is starting to roll over, and just a lot of negative price action. This does not look like a bounce that's going to be sustainable, but we'll see. All right, let's have a look at the tips to bond ratio. We'll just look at this from a longer term time frame. Tips to bond ratio is what we look at to see inflation in the market, and what this shows is that inflation has picked up, and we are in the early stages of a longer term inflationary move to the upside. And what that means is that inflationary assets such as bonds, real estate, precious metals, commodities are where you're going to see some significant upside. However, there are some sectors like real estate that are very overbought due to the high dividend yields. They actually might fall because of expected higher interest rates. But bottom line is, this is a bullish flag, and we expect this correction to ultimately end and go higher. Inflation to move higher, but right now we're in a corrective phase, just as we saw with the bond yield. So we expect some lows here to continue to be made, but ultimately this bullish flag we expect to go higher. U.S. dollar. This is a index that we've been very accurate on, and we're not always going to be accurate, but we'll definitely pat ourselves on the back when we have been. What we see here is a lot of weak action. When we saw this 103, 104 level be hit on the U.S. dollar, but wasn't met with confirmation on the RSI level over here, there was significant divergence. That's when we said that the dollar is acting very weak. We went short. We went into precious metals at this time, and clearly on the monthly level, we broke down below the 50 on the monthly RSI. That's very bearish development. There might be a bounce. Wouldn't be surprised to see a bounce to this 97 level, but ultimately we think that the dollar move is not over yet to the downside. Wouldn't be surprised within the next couple of months to see that 87.50 level tested. Ultimately, if you look at the dollar at a much longer time frame, this is a bullish move. This has had multiple years of basing consolidation. We broke out higher, and this is frankly a long-term cup and handle potentially. Even if it goes to this 87.50 level, if it's met with strong support, expect another basing and a move higher ultimately towards this 120 level. But this may take years to develop. Let's have a look at volatility, the VIX. VIX is what I'm seeing on the VIX is a suggestion that we're at the early stages of a major breakout in the VIX. Monthly, you can't see it as clearly, but it's very possible that the next couple of months will have some pretty substantial volatility. We'll have to stay tuned there. If this particular flag pattern breaks to the upside or above this 15 level, as it attempted to do here, that's when we'll see this substantial volatility. Why do I believe that there's higher probability of this breakout than times past? Well, because RSI is creating higher highs, and as I mentioned before, RSI leads price 99 times out of 100. And so right now we're below this 50 on the weekly RSI, but if this turns around and goes back higher, that's when we think this flag pattern will be broken, and a test of 2250 will be in the cards, and that coincides with a lot of the price patterns, the chart patterns that we're seeing on the Russell and the Nasdaq, and even starting to see on the S&P 500. Here's another view of the VIX daily chart. Big basing pattern for many months here between that 10 and 12 level, finally broke out, and now we're creating this bullish flag here. So let's see what happens around this 11 level. If 11 level finds support, then we expect this to make that next move higher in the coming weeks ahead. And let's see what else we have here. Finally, the world index. So this is world stocks ex-US. When you look at the ratio charts comparing world stocks versus US stocks, what we see is that and this is not what we're looking at here, but you see that the world stocks have definitely broken out of their downtrend against U.S. stocks. So from a longer term basis, you want to be in world stocks versus U.S. stocks. But what you're seeing here is that there's a potential for a significant pullback. Some resistance, some divergence is taking place in this space where you're seeing a test of multi-year highs here around that 1950 area, but RSI is not necessarily making those same highs, and so it's finding resistance at the same level we found resistance before. So that suggests that it's not significant negative divergence, and potentially it's positive divergence relative to this level over here. So I'm bullish on world stocks, but this suggests that we're gonna see a pullback here, possibly to that 1730 level, the middle Bollinger Band on the monthly, which is a pretty substantial move to the downside, but again, in the context of a big up move that's developing. Here's another view of this. This is kind of a bearish wedge that's been broken to the downside, and we expect this to probably test that 50 EMA and ultimately probably test that 200 EMA on the weekly chart around that 1750 level. Very often break down below it and then have this strong move to the upside. But it remains to be seen what this does. If this can break above that 70 level on the weekly RSI once again, then everything I've said is nullified and we're back in the uptrend. So stay tuned. Again, on the daily move, so far it's been constructive. It broke above the 50 on the daily RSI, but this is the level that you want to watch, this 60 level. This is when this big move happened, and that will serve as pretty strong resistance. Bottom line is, these next couple of weeks will be very telling to suggest whether this last move in the markets has been a bounce and we're going to see a resumption of the downtrend, or is this a resumption of the longer term uptrend that we've been in over the last couple of years. Guys, thank you for watching. We appreciate your support. Please do follow us on StockTwits at Moneyology, Twitter at Moneyology, and please subscribe to our YouTube channel at Moneyology. If you have any suggestions or have any videos you want us to cover, feel free to send us a private message. Thanks again, and have yourself a wonderful week.